Hi everyone, welcome to a new video. Today I'm going to be talking about the Tiffany LVMH merger and where there could be an opportunity for investors to make money. So I'm going to talk about merger arbitrage today, and that just means that what you effectively do is go long the shares of either the target company or the acquiring company and short the other, whichever one it is. Now, which one you choose to go long or short on depends on the expected chance of success. So if you expect it to fail, you would short the target, go long the acquirer, and if you expected it to succeed, you would go the opposite way, long the target, short the acquirer. Now that reduces your risk a little bit because obviously you're expecting if the deal to fall through that the acquirer falls, so it's hedging you. So it's really a hedge fund strategy. And this is also quite reliant upon the chance of success and the timeline for the deal. So if you think the deal's going to close in a year's time, that might be less appealing because you've got to hold those stocks for so long. If you think it's going to be quite a quick deal, then it might be appealing. Now, Tiffany's an interesting one. This merger was agreed back in November, obviously before COVID, at $135 per share in pure cash. It's the largest merger that LVMH has ever undertaken, largest merger in the luxury retail industry at 16 billion US dollars. Now, LVMH is now allegedly trying to break out of this deal because of the changing situation, because of other different factors. I mean, they claimed on Wednesday that they were breaking the deal because the French government had sent them a letter saying that they couldn't go through with it, they had to delay it because the ongoing trade spat, shall we say, between France and the US. Now, French officials have come out and denied those claims, said that's just not true. That's not what the letter to LVMH said. So this is all based on a letter that one of the French ministers sent to LVMH. The French officials have come out afterwards and said it is not legally binding. LVMH are free to do whatever they want. Now that to me is a good sign. That means that LVMH is really using this letter as leverage. They would have known it wasn't legally binding. They would have known that it wasn't solid. But they're using it as leverage. Now, why I think that is what they've done before. Bernard Arnault, the CEO of LVMH, does want this deal. You know, he approached Tiffany. This was not Tiffany putting itself up for sale. It was an unsolicited bid for the company. Arnault has already tried to renegotiate the price. He thinks it's a little bit steep from this current COVID situation, as obviously luxury retail has suffered by the most part. And his attempts to renegotiate were completely rejected. He previously tried to gain leverage recently by saying that they were not going to buy any shares on the market, and that it may seek to reduce the price, which they tried to do, but they failed. The thing here is, this is all strategy. You know, this FT article here goes into the fact that he's an avid chess player who enjoys teaching his grandchildren, who enjoys this kind of game. You know, he's used these strategies before to get the merger agreed, and now he's going to use them again either to renegotiate or apparently to cancel it. Personally, I think that's pretty unlikely, as I said, because he is the one that drove this deal. He wants the company. He thinks it's a good investment for LVMH. You know, rumours from inside the company mimic this, that he is still keen to do a deal, just not at this price. Now, as soon as the news broke that LVMH was trying to back out the deal, allegedly because of the French government, Tiffany immediately filed a lawsuit in the state of Delaware in the US. So the Delaware court now has to decide whether the original merger agreement is airtight enough for LVMH to be forced into the merger. Now, Delaware has a bit of a history of mostly ruling on the side of the acquirer. of the target. It's pretty strict on that kind of thing. There would have to be a great reason for LVMH to back out. So the chances are that even though it might be long, Tiffany might eventually win. Now that obviously isn't an ideal outcome. You don't want a protracted legal battle between the acquirer and the target company. But that seems to me to be a good sign. You know, if LVMH know that, then they're going to be more keen to find a deal, even if that includes paying some form of payment to sever the deal. That could still be good for Tiffany stock. Obviously less good than a merger. You know, I think what's likely to happen here is this is a new strategy by Arnaud. He's using this as an opportunity to renegotiate. He does want to buy Tiffany still, I think. He likes the company. He likes that it moves LVMH into the US market more, and that it allows them to increase their hard luxury goods sales in the form of jewellery, things like that, rather than soft luxury goods like, say, handbags that they're obviously a big player in, Louis Vuitton. Also, I think, you know, Arnaud's got a history of this kind of big merger slipping away before in the form of Gucci 20 years ago. He's not going to want that to happen again. He's going to be keen to find a deal here because he did want this company. He approached them. So yeah, as I said, I think it will get renegotiated. You know, I don't think Tiffany are going to stay at their 135 price because, to be honest, the company's not worth that now. Now, LVMH have come forward in the past few days and said, well, it's not just the French letter, it's also that the company's been mismanaged during the COVID crisis. I think that's just another strategy just to try and increase that leverage, that on top of the trade concerns. Really, I'm not sure what you could say a good management team would do in the COVID crisis. I mean, the whole point is that it's underperformed massively, way below 2020 expectations. Not really sure what you were expecting from that. Seems difficult to me to judge a management based on this situation, but we'll see if that's a solid enough argument. You know, in reality, I do think this will be renegotiated, possibly towards the original merger price, which was 120, the first bid that they put in. And, you know, most analysts agree with that. People are expecting a deal. That's why, even though the share price has fallen around 10%, a little bit less than that, it hasn't completely tanked. I mean, it's sitting around 110, 111, and that's obviously a pretty big increase if it does go through 135, but if you're looking at more of 120, that's a good range. So yeah, personally, I think this would be a great opportunity for an investor to get into merger arbitrage if that's what you wanted to do. For me, it's not an opportunity I'm going to take. The reasons for that is just because I'm looking for value stocks. I don't really want to deviate from that too much, but I saw this play come up and I thought it was a good video to share, a good idea to share. Obviously, as usual, this is not financial advice. I'm not a financial advisor. Do your own research, form your own opinions, and, you know, enjoy the process before you make any investment in any companies. So yeah, thank you for listening to this video about a possible merger arbitrage strategy with Tiffany and LVMH. And please go and watch another one of my videos and like and subscribe. Thank you very much.